Good afternoon. I hope you can all see us. My name is Robin Archibald. I'm the chairman of the company, and it's my pleasure to welcome you to the annual general meeting of the company. It's, according to my watch, now noon, so that's the appointed time for the AGM, so we will now open the formal business. If I may, I would like to introduce you to my fellow directors. Margaret Payne, Central Stream, who's the audit chair, Clive Richardson, and Patrick Reeve, who will be known to many of you, are all our board members. Also present is Will Fraser-Allen, the managing partner of Albion Capital, the company's investment manager, and Will give us a presentation on the results of the company for the year and looking forward, which is one of the most important parts of our annual attendance here at the AGM. Quorum for the AGM is 2 members entitled to vote in person or in proxy. This requirement has been met, and so I declare the AGM open. The notice of the meeting, which is attached at the end of the annual accounts, has been in your hands for the statutory period, so I will take the notice as read. On a personal note, as indicated in the chairman's statement, this is my last AGM, as I will be retiring at the end of the proceedings today. I've had the privilege of serving as a director of the company for 9 years, and for a preceding 3 years on Albion Income and Growth, which merged with Tech and Gen in 2013. As a director of the company during the last 9 years, I've had the pleasure of serving as audit and risk chair for 7 of those years, and the last 2 as chairman. I'm particularly delighted that Clive Richardson, who's an existing member of the board, will succeed me as chairman at the end of these proceedings. I'd also like to take the opportunity today to thank Marianne Cordero, who I think is watching this, for her time on the board. She joined on the same day, having come across from Albion Income and Growth, and I would like to extend the board and Albion's thanks for her time serving on the board, and to wish her luck in her new VCT role, which will remain nameless. Moving on, and to maximise engagement with shareholders, and I believe there's a fair number of shareholders and guests who are online with us today, we've arranged for this Lumi online platform to broadcast the AGM. Members will be able to participate fully, including asking questions as we go through the proceedings, and we've already had some questions which we'll try and address in a Q&A session during the course of the meeting. There's also real-time voting on the board proposed resolutions, and I'll give a short instruction on how that's done before we move on. So the next part of my short introduction is procedural. The resolutions will all be voted on by way of a poll, and that's how we did things at the 2 meetings last year. As you may recall, we had a general meeting and an AGM. The votes received under the poll will be added to the proxy votes that we've already received from those who've sent in the proxies, and may I encourage people to continue to do that. That's a very, very important part of us getting from you, our shareholders, the voting participation that we want. So those proxies will be added to the poll and verified by the registrar Computershare. If you have already submitted a proxy, unless you want to change your vote, there's no need to do anything in connection with the poll. However, let me explain how the poll works. Once I open the poll, the voting is on the Lumi platform. The list of resolutions will automatically appear on your screen. Please select the option that corresponds with how you want to vote, and then that option will change colour, and a confirmation message will appear to indicate your vote has been cast and received. If you want to vote on all the resolutions displayed, select the Vote All option at the top of the screen. If you want to change your vote, you have the option to reselect your choice. Now, just a reminder for us all, including board members, there are 3 ways in which you can vote. There is in favour of the resolutions, against the resolutions, or you may withhold your vote. Should you have any questions in the voting procedure, and I say I'm jolly glad I've filled in my proxy card and saved myself going through any polling procedure, but if you have any questions, please submit your questions, and the company secretary and the administrator are present in the background to answer any queries you might have. It's very strange speaking to no audience and across the screen, but in having covered this, I can say, excellent, I now declare the poll open. We'll now turn to the main business of the AGM. Following the manager's presentation, the directors and the manager are happy to answer as many questions as you want to pose to us, either from Will's presentation or about the proposed AGM resolutions, and we'll take the time. If we fail to cover questions, or you don't think of them at this stage and you've got questions post the event, by all means, file your questions with the successor chairman, and between Albion and ourselves, we'll try and answer them. Because again, it's important to us that shareholder dialogue takes place and we resolve any doubts or the queries that you might have. If during the course of the meeting you want to ask questions, apparently there is a messaging icon from within the navigation bar. Type your question at the top of the screen and then submit your question by clicking on the arrow icon on the right of the text box. Now, for a much more important part than the procedural parts, I'll hand over to Will Fraser-Allen to give his annual presentation on the company. Thank you very much.
Robin, many thanks for that introduction. A big welcome to all our shareholders, albeit virtually. But it's great to see that we are getting very good turnouts for these AGMs. So I'm going to take you through a presentation which runs you through the results for Albion Technology and General VCT for the year ended 31st December 2022. And if we move on to the next slide, I'll be running through the highlights in the year, performance data, what's been going on in terms of portfolio, some exits, and then touching on a reminder of our investment strategy with a bit of ESG. And then I'll also be talking you through the Q1 results that have just been announced to the market before this meeting began. And to give you a bit of a flavour, they are strong results. Next slide, please. But looking first at the year to December, it was a somewhat challenging year, and I will be going into a bit of detail around what has driven the 4.64% reduction in the year. But we still maintained our dividend strategy, which is to pay out around 5% of NAV, and that gave rise to a 3.99p dividend. We go to the next slide. Just to set the scene a little bit, it has continued to be quite a challenging time for investors generally, and those with a focus on healthcare and technology in particular. So we have still faced some pretty major macro economic and geopolitical events, and a backdrop that has given rise to high inflation and therefore rising interest rates, which may go on to increase further still. So that has led to a major resetting of technology valuations in the quoted market, and we can't be completely immune to that. However, I would say that many of our companies, which do focus on mission-critical products and services, and which continue to grow, have helped protect shareholders from some of the very large drops that you may have seen elsewhere. But we have had good performance in Q1, which I'll come to. Next slide, please. Looking at 1, 3, 5, 10, the one else we've talked about. But if we focus on the 10-year, because that's the important one, we are looking to target 5% a year to at least cover that dividend target. So we have fallen marginally below that, 49.5% over that 10 years. However, the Q1 should put that right. Next slide, please. So what's driven the results? We've had strong fundraising this year. 2022 did have 2 fundraisings in it. It was simply the timing of when we launched the prospectus top-up offers. hence why you've got raw 28 million versus 15 this year. Despite the tricky broader market, particularly M&A for tech is down considerably, we were lucky that we did complete on 3 exits in the first quarter of 2022. That was Credit Kudos, Frazier, MyMed, and me. And I've got some slides on those in a moment. But in terms of investment rates, we had a very busy year, and that reflected the opportunities that came out in some of the market dislocation last year, and the fact that we were well positioned with cash to deploy, and were thus able to invest into 15 new companies. I'll talk about a few of them in a moment, because I think the key is there were a number. This is all part of our strategy of sowing the acorns that grow the mighty oaks of the future. And then we also continue to support our existing portfolio. And again, an important part of our role here is to back companies when they're young, and then as they prove themselves, to further invest. Share buybacks a little bit higher, which you'd expect with a larger fund following the fundraisings, and dividends similarly are formulaic to that 5%, and will be larger because the fund is larger. Next slide, please. So if we look at what the actual valuation movement, which was a net decrease of 4.5 million, on the positive, we had the benefit of the Credit Kudos exit and strong trading at Converter. However, we had a very poor result for Oxensus, which I'm going to cover in the Q&As, because we've been sent in a specific question by shareholders. So I'd like to pick up a bit more detail around why Oxensus has been so heavily written down as part of the Q&A. Black Swan was another negative driver, and that was a company that is seeing much slower growth in a very, very challenging market. Lots of other write-ups and write-downs. There's full details of those in the annual report. But in aggregate, we saw a net decrease of 4.5 million pounds. Turning to the next slide, please. So how's the portfolio evolved? We've now got some 60 companies in the portfolio, employing 4,700 people, and most of those jobs are in the UK. So that's all important, because the VCTs have a core role, and it's one of the reasons why shareholders benefit from the generous tax incentives that come with VCTs, that they are backing companies and creating jobs. And if we look at where the sector is invested, we have a 24% allocation to cash at a time when cash is going to be important, both for supporting the existing portfolio and new investments. But as I've talked about in previous AGMs, our strategy is to progressively move the fund into technology and healthcare. So if some 17% being in healthcare, and then some 42% is now in software, including fintech. So the portfolio is very much heading in the direction of travel that we've indicated previously, but we do still hold an allocation to renewable energy. So this is wind, solar, hydro that were with the investments we made some years ago, which are over time generating decent income to the fund. Next slide, please. So if we break down the invested portfolio to give you a sense of what's the stage they're at, and a younger, smaller company is likely to be more volatile and more mature. This is how we tend to look at the portfolio, to get a bit of a sense of where the portfolio is on that in terms of maturity of the investment. So if I look at revenues on the first stage, because a number of our companies have grown very significantly now, we have some 71% of the invested portfolio by value is currently in businesses with revenue over 5 million, and that's something of an increase over last year. In terms of the very early stage, in terms of revenues, less than 1 million being really quite small, it's less than 10%, 9% to be precise. If we look at that in employees as a proxy for a size of companies, so 6% of the portfolio have less than 20 employees. but importantly, some 59% are in companies with over 100 employees now. Next slide, please. This is an important slide because it looks at the top 3 investments in the portfolio. So by virtue of being an investor in venture capital, success is driven by backing those companies that deliver outlier performance and making sure that we capture the value as those companies grow. So making sure we do back our winners. So Quantexa is our data analytics business in detecting financial crime, particularly in financial services. Radnor House is our growing school in Sevenoaks, and then Pravica is our children's medicine business. Those, as at December, represented a book value of 26.9 million, some 22.2% of NAV. So over 20% of the portfolio is concentrated around the 3 largest investments. But Quantexa is growing very well. Radnor House continues to grow its student role, and Pravica is making great progress not only on the drug it already has in medicine, already has in market, but the pipeline of medicines that are due to come to market over the coming quarters. Next slide, please. Pick up new investments. I'm going to talk in a bit more detail about Pepi and Tokyo in the moment. But Peak Data is a platform which helps pharmaceutical companies with their sales and marketing by providing insights into the key decision makers who look to purchase their drugs. And then CS Genetics is an early stage but very interesting genetics business, and they are developing a single cell sequencing solution in a very novel way. If we just turn to the next slide, I'll pick up Pepi Health. So Pepi Health is a employee healthcare platform. So what it's doing is it's allowing companies of large enterprises and smaller businesses provide healthcare support to their employees, and it's particularly focusing areas that have not historically been well served. So by way of example, providing support in menopause for women, but also looking at other areas such as fertility. This was an £8 million investment across our Albion VCTs, of which 1.5 million came from this fund. And the size of that investment sort of reflects that this is a slightly later stage than some of our other investments, and it's to help that business expand into the US. If we turn to the next slide. Tokyo, similarly, it was a £7.4 million investment, of which 1.4 was from this fund. So again, investing to help them develop their product. And what Tokyo does is it allows institutions to launch financial products very easily. So it's often non-financial institutions. So, for example, if they wanted to launch a credit card. So it's a demonstration of how, with the rapid improvement of fintech, how businesses are able to launch products very rapidly using this platform, Tokyo. Next slide, please. Follow-ons. We have a continuous program to back our existing investments through follow-on investing. So Black Swan, Speechmatics, Runa, Transfic, and Helios, all companies maybe we'd be familiar with. But this slide is just sort of demonstrating that important part of our reason for being, which is to provide that support as these companies grow. If I move to the next slide. Exits are important. It's realizations that fund our future dividends. So Credit Kudos was a business that we sold to Apple. So really encouraging to see a global technology business like Apple recognizing the strategic value of businesses that we have backed. And Credit Kudos was a modern style credit referencing agency using open banking APIs. And whilst we didn't hold this investment for very long at all, we made a very decent return. So the 3 million invested by VCTs was on that we delivered a 5.4 times. This VCT share of that was 5.1 million. So a really nice exit and real confirmation of the important technological projects that are being undertaken by our companies. We move to the next slide. MyMeds we had held for rather longer, and this was in the area of providing software to support clinical trials, and this was particularly around capturing safety data. This was a business that we sold to a investee company of Stanley Capital with the private equity house, and we delivered a 3.3 times return on our 3.3 million of cost, delivering 1.5 million to this fund. So a respectable and encouraging return, but again, an important driver of future dividend payments. Next slide, please. Reminder on our investment strategies. We are very much focused on B2B software and healthcare, and we invest from seed, which is really quite young businesses, and we will selectively invest at Series B, and Pepe would be an example of a larger business at Series B. We do particularly target Series A investing, which is where the businesses have a product, they're selling it, have achieved all that product market fit, as it's known, which is we've gained confidence that they have the product, they know the market to which they're selling it, and we're funding them to rapidly grow those businesses through enhanced sales and marketing and product development. Focus on long-term trends, very much B2B. So we are selling mostly to enterprises, and we actively minimize our exposure to consumer-facing businesses, because we believe that those are most impacted by economic cycles. Next slide, please. ESG is very important to Albion and indeed the Albion Technology in General board, and we're making good progress now in how we implement the ESG strategy, both across the funds, but also across how we invest, and indeed Albion, our business itself. So this is all around about making sure that the fund has an appropriate risk return profile in the context of being a responsible investor, so that we can deliver long-term value to our shareholders, and that's because the businesses are sustainable and doing good for the world around them. And how do we do that? Well, we now have some well-developed principles that we apply when we invest, from the types of investments we invest in, but also looking at how those companies themselves are implementing their ESG strategies and making sure that those businesses are attractive acquisition opportunities for large corporate buyers who themselves will have very refined and extensive ESG strategies. And then what we're increasingly now doing is we measure the ESG impact of our funds, so that we're starting to collect some really good data about the sustainability and impact of our underlying investments. If we move on to the next slide, we've also been doing a lot at Albion itself. So we have committed to net zero by 2030. So we've measured our carbon footprint using a software platform called Plan A. And as we move towards net zero, we are currently purchasing carbon removal permits, biochar specifically, so that we are effectively reducing the carbon. We're reducing the carbon impact of our own carbon usage. In terms of the business itself, we work with Fair HQ. Again, they're a software platform, and this is all around making sure that we achieve diversity across our own portfolio. And this is, we are keen to see that the venture capital generally, but Albion in specific, is a business that is open to underrepresented groups. And we're working to see how indeed our the portfolio companies themselves are founded and run by diverse founder teams. Alongside that, we continue to back our long-term charitable partner, WizKids. For those of you who don't know WizKids, it's a fantastic charity that provides wheelchairs and other support for disabled children who otherwise wouldn't be able to afford the equipment they need to make their lives better. So, as I said, lots fully integrated across the investment portfolio. Lots of ESG reporting and measuring now going on. We are a signatory to UN PRI, and we're looking to improve our score going forward. But importantly, we want to make sure that we continue to update our stakeholders, such as VCT boards and indeed our shareholders of those VCTs, on the progress that we are making. Next slide, please. So Robin has talked about the recent board changes, but I wanted to add my thoughts as on behalf of Albion as the investment manager to the Albion Technology and VCT. We've had the two key changes that Robin talked about is that he is stepping down as chairman, and Mary Ann Cordero has recently retired. Both Robin and Mary Ann have served on the board of ACTG for 9 years and have done a really fantastic job and have been both an important check and balance to what we do at Albion, but enormously supportive and very collaborative with what we do at Albion. And they've done a variety of roles. But on the next slide, what I'd like to do is actually just reflect on what has happened to the fund under their involvement. If we could move to the next slide. So if we look back to the portfolio as it was when they joined, it looked very different in 2013. It had a portfolio that had asset-based businesses like pubs, health and fitness clubs, obviously schools, renewable energy, but relatively little in terms of IT and technology. You roll that portfolio forward, it looks very different in 2022, as we've previously discussed. But if we look at it more broadly, the fund was a relatively small fund back in December 2013 at NAV of about 65 million. And that has now grown during that time to 140 million. The fund has paid out 49.44p of dividends, and encouragingly, the total return per share has increased from 161.75p to the current £2 and to just over 2p. So a lot has happened over those 9 years, and I thank both Robin and Mary Ann for the contribution they've made to support the managers as we've worked to deliver the investment performance. So thank you to both of you. If I can move to the next slide. So prospects. There are ongoing uncertainties in the world. The war with Ukraine continues. Inflation continues, although inflation is coming down. We therefore need to be cautious as we go forward, but we can take some comfort from the fact that the portfolio is well balanced across our target sectors, and they are sectors that we have chosen because we believe they provide resilience. We have little exposure to discretionary consumer spend, and as I've alluded to earlier, we are backing those businesses providing mission critical softwares and services. But most importantly, we also have a decent level of cash, which not only allows us to invest in new opportunities as they arise, but we can also support our portfolio companies as they grow. And if we look at the next slide, which is the first quarter results, we've had a very encouraging uplift of 7.8%, which brings our NAV to 78.59p. And that is largely driven by a significant increase in value of our largest investment, Quantexa, some 11.4 million uplift. And Quantexa, and that is on the back of a investment from a Singapore Sovereign Wealth Fund, GIC, which has completed in early April at a significant uplift to where our carrying value. And that's on the back of some very strong trading at that company. So really good news. It does have the impact, though, that it further increases the concentration of the top 3 investments, which now sit at 28.1% as at 1st of March. Looking forward in terms of events and ways that shareholders can get involved and engage with us, we will continue with our virtual AGMs because they are more accessible to more shareholders, and we see a lot of people watching their AGMs in their own good time when they have time available. But that's not to say that we don't welcome the opportunity to meet our shareholders, and I know the Technology and General Board particularly keen to have interaction face to face with shareholders. So if I could give a plug to our shareholder seminar, which is on the 15th of November, again as last year at the Royal College of Surgeons, and we will be running a similar format to last year. So there'll be portfolio company presentations, there'll be some interesting speakers, there'll be breakout areas to talk about subjects of interest, but most importantly, a great opportunity for shareholders to interact with the various boards of the Albion VCTs, and indeed your manager, Albion's team of investors. You'll be pleased to see a dividend has been declared in line with our 5% target. So that's a dividend of 1.82p, and that is payable on the 30th of June 2023. So on that note, I'm going to hand back to Robin, who's going to control the Q&A, which, as I know, a number of questions have been submitted, and I imagine a number have been further submitted while I've been speaking. Robin, could I hand over to you?
You can indeed. Thank you very much, Will. That's very helpful. And in fact, there's been a number of questions that have been filed whilst we've been online, and I'll try and address some of those first. The more tricky questions go to Will, whether he likes it or not. But there's been a couple of questions we've received, which is in connection to the virtual AGM. We had one previously, one has come in whilst we've been on air. As Will described, we intend to go forward with the virtual because our attendance levels seem to be so much higher. To take last year as an example, we had a hybrid where we had 2 meetings, the general meeting and the AGM at the same time. We had 5 physical attendees. So I think we remain open-minded to how the AGM is hosted, but I think very importantly, Will has reflected the shareholder seminar, which is very much a face-to-face, much more discursive, much more access, and much more relaxed exercise than necessarily the AGM, which is the formal business to be conducted. So that's our response, but we do note the fact that some of you still like turning up in person if you can, and I hope we've responded to it accordingly. Second question, which is a technical one, is about preemption rights. Somebody has asked a few days ago about preemption rights. Legal term, but technically we disapply preemption rights so that we can manage the top-up offer. Many investment companies disapply preemption rights up to 20% of the issued share capital each year. It's a means of us inviting in existing shareholders to participate as well as new shareholders. Without that, you would need to organise a rights issue. So it's a technicality, and it's a technicality that's used throughout the investment company sector, but particularly with VCTs. And just to be clear, in disapplying those rights, we do not dilute existing shareholders' interests other than voting interests, because if they don't participate, because the exercise, the top-up offer is at a premium to cover the costs of the offer and the net asset values prevailing at the same time. A question that's just come in, and I think it's appropriate for me to respond to, which is about the performance fee. And I think the question that's been asked is, given a negative return of 4.6%, is it equitable for a performance incentive fee of 272,000 to be accrued? Incentivizing also appears to indicate the scheme is flawed. Will the directors review it? Well, without boring for Britain, the whole way our performance fee is calculated is over a 5-year period. And if you've been an investor for a period of time, you'll recognize that we've had some fairly good years with a more challenging last year, and we're now having another good year. The way the performance fee is calculated is by reference to 5 years rolling performance. And that accrual, the 272,000, reflects the good performance, which could all be clawed back because the first payment associated with the performance of that 5 years is not until 2024. So what we've tried to do is align the investment period, and we've chosen 5 years, to calculate the average performance over that period, to put a hurdle rate of 5%. And for the eagle-eyed amongst you, you'll note that the company has produced slightly over that in the past. It's slightly under it at the moment at 4.9%. But if, and only if, over that 5-year period, the performance fee is achieved, does a performance fee be paid. The accrual therefore reflects, and it was a bigger accrual at the interim stage, the fact that we had performance in the earlier years. We think as a board, having introduced this last year and being supported at the AGM, it is an equitable means. And it wasn't just a one-sided exercise, because at the same time as we put the performance incentive hurdles in, we reduced substantially the management fee from where it was at 2.5 to 2%. So the basic OCR, which doesn't include the performance fee, has been reduced significantly. So I think we feel very comfortable, and if anybody's got particular detail they want to discuss on the performance fee, happy to do so. But the accrual is a technicality and could well and truly disappear, I'm afraid, for Albion's point of view, if there was underperformance over this next 12 months, and indeed underperformance against a hurdle rate of 5%. We have another question, which I'll give myself a bit of a rest, which is about the particular investment, which was looking at the largest, or one of our largest investments being basically written off, where the questioner asked about the cost of 3.3 million, then valued at 4.7, and now basically written off. So I'm going to throw that ball to Will, which is in connection with our Census investment, which he did touch in his presentation.
Robin, and as I said in my presentation, I had seen this particular question coming in. So obviously, Census was a significant disappointment to us, because in our view, it had substantial value at the beginning of last year, which disappeared over the course of 12 months. So to give you a little bit of background to the extent I can, there's clearly always commercial sensitivities around this. But if we remind us, Census was a very interesting deep tech business. So they have developed high pressure and high temperature sensors for use in aerospace, specifically jet engines, and in power generation. So it allows for greater efficiency. We were invested in it for 15 years. This fund in particular invested a substantial amount of money in it. It took longer to get commercial traction than we had expected, and was continuing to do so. So we had introduced a strategic investor into the business to help share the funding requirements of that business going forward, and that was effectively a German industrial shareholder. And that was at a time when finding funding for this type of company had become very challenging. We entered last year with the expectation that the business was continuing to progress, albeit slower than we had hoped. And we also entered the year with the expectation that there would be further funding available from that strategic investor in a form that was compatible with holding it through a VCT. What transpired was that that funding in a suitable form was not available. We felt unable to continue to support the business because of the size of funding requirement and the needed. So we found ourselves having to step back very sadly from the investment, and we sold it for a nominal sum to that strategic partner. So clearly disappointing. It is, we are in the venture risk. What I would say though is it really does remind all of us, and Albion as the manager in particular, that this is all about ensuring the companies are properly funded.
Focusing on ups and downs, we've just another question in which is very much on the ups, which is from one of the shareholders suggesting, is it correct to assume that we will not be making any partial disposal of Contexa, no matter how large a percentage of NAV it becomes? Now, incidentally, that's a question we as a board ask with fair regularity, including an hour before the meeting. Will we run until a suitable exit opportunity arises? So I'll hand that again to Will.
Great, very good question. And I am always at pains just to highlight to shareholders and potential shareholders that a feature of a venture capital portfolio, you do get concentration within the portfolio if we're doing our job correctly. The broad principle is to run these investments, so run the winners. In a situation where a company becomes very significant, we would always review the options available to us when they become available, i.e., is there an opportunity to potentially sell down? There hasn't been an opportunity, so we haven't been needed to or to go through that thought process. There wasn't at the last rounding. There was not an opportunity for existing shareholders to sell, but should that opportunity come up, we would clearly consider it, and part of our consideration would be the level of concentration of that portfolio relative to the overall NAV.
Giving Will a bit of a pause for a breather before we turn on to questions on existential risk and AI. Obviously, someone who invests in a number of VCTs asked us this question: any chance you could change your registrar and the people who deal with VCT application away from Computershare and in-house to something more professional and quicker, like City Partnership? They are really good. Well, funnily enough, I can echo they're really good because I appointed City Partnership many years ago to an educational charity in Scotland. But can I put it this way? City Partnership only operate for VCTs in a limited capacity as a registrar. Computershare, one of the biggest and most known registrars, operate for the entire listed market in the UK, one of the most secure environments. Now, with the VCT sector, instead of Computershare acting as registrar and receiving bank, the receiving bank for our purposes is done by Albion Capital, which we think is helpful given the nature of our private investor base, many of whom make investments each year. We review all our agent arrangements every single year at the Management Engagement Committee, including the costs of those arrangements, which we think are pretty competitive. But having had the question raised and having had experience of City Partnership, but in a very limited basis for the other much smaller VCTs, I think is where they operate from. And we're reasonably happy with what we've got. But if there are particular issues on the receiving agent process or the registrar's process, please contact our company secretary, because it's very important to us, whether it's missed dividend payments or instructions under top-up offers that are not being implemented and so on. Private shareholders take a lot of care and maintenance, and we'd like to think that what we've got in place works well and economically for it. But thank you for the question, which leaves me to the last two questions that we've received. And thank you for all these questions. They're very useful as part of the dialogue. This is for the investment management team. Do any of our invested companies face an existential risk over the next year or so from recent developments in AI? And if so, can they meet the challenge? And then an associated part with it, Will, is in which areas the technology sector is still compelling, and how has ChatGPT altered the landscape generally and for the portfolio? I'm glad I'm retiring, because things like ChatGPT and AI are beginning to get somewhat beyond me. But there we are. Will, over to you.
Thank you, Robert. That's a very good question. I think the two questions are really interlinked. So let me just sort of take a step back. We have been investing in AI companies for many years. Our largest investment, Contexa, has at its heart AI as part of its data analytics solution. So AI shouldn't be seen as something that's just happened overnight. ChatGPT is an iteration of AI, which has come to prominence at the end of last year. So we are very alive to the investment opportunity of AI. We don't believe there's any existential risk to our portfolio companies. In fact, we see we see an opportunity. We see an opportunity for our existing investing companies to use the evolving and improving AI as a means of delivering their products and services. But we also believe that the existence of such things as ChatGPT will bring about new business models and what we do as venture capital is to back change and back new business models as they evolve. So not an existential risk, something we're very conscious of, something that all our investing companies are looking at. But my view is there's more opportunity than downside.
I can also commend the new chairman and his experience for this type of area, because Clive has come directly from the technology and healthcare space, and we are finding his involvement on board discussions on what is a rapidly evolving sector highly useful. I'm afraid I'm of a category who's still accustomed to paper shuffling, hence understanding what registrars, receiving banks, and application forms still look like. The last question, if I may. Oh, no, there's another one coming in. So let me take the fresh off the blocks and really test ourselves. The question that's come in is, do you anticipate any reduction in subscriptions to the VCT as a consequence of the abolition of the lifetime allowance for pension savings? I should have said that very slowly, Will, so that you have a chance to think about it. I'll say briefly that the whole top-up offer and the importance of it to us has been a growing phase over the last 10 years, but we don't rely on it. We keep cash balances and we keep a good eye on our future cash projections. But there is no doubt at all the top-up offers have been very important to us for bringing people in the same way as buyback. And from time to time, HMRC makes life no easier for us in changing the tax landscape for the private investor who's heavily invested in here. But in terms of the abolition of lifetime allowance for pension savings, Will, you sitting in various committees, are you able to answer that for us now?
Yes, of course. Well, I'll give a view, but clearly, time will tell what the outcome is when the next fundraising season happens. Although this was announced during the course of the last one, but only right at the end. I think my broad view, and I think shared by many in the industry, that it won't have a massive difference, because probably the bigger driver of investment into a VCT, which is linked to pensions, is actually those that are not able to invest hardly at all because their incomes are above 200,000. Because there's effectively two limits that are affected here. It's the amount you can put in each year, which has been reduced very substantially. So that's why VCTs are used as a way of supplementing pensions. The lifetime allowance is how much the value you can get to. But if you can only put in a small amount, it's less relevant to where you choose to put your retirement savings. So at the edges, I think there might be an effect, but I think the actual allowance that is more relevant is the amount you can put in each year rather than how big the pot can get to. So my suspicion is not a massive difference. I hope that answers the question sufficiently, Robin.
Well, it's certainly that recent change for those of pensionable age or thinking of pensionable age is very significant. But we've all noted also that the opposition may well try and overturn that change should they be in power. And what was given with one hand was taken away with another, in capital gains tax reliefs being halved and due to be halved again, and then the income relief and dividends also being. So for a private investor, it remains to be very alert to how to save for the future. Unfortunately, Albion's VCTs have proven useful vehicles and tax effective vehicles in that respect. So let's look forward to see what the next top-up offer and indeed the next Chancellor brings to our attention. So there are no more questions that have hit the screen. So I hope that the answer that was given to one of our shareholders on the technology space answers broadly, along with Will's presentation, where our portfolio has moved over the piece. So if I may, I would like to continue with the formal business of the AGM. And No final questions. So thank you for all those helpful questions. The full text of each of the resolutions, they were set out in the notice of the meeting at the end of the accounts. And as you'll have noted in the accounts, the board was recommending that members vote in favour of all the resolutions. So that I enhance my reading skills, I will read the resolutions to you. The first is to receive and adopt the company's accounts for the year ended 31st December 22, together with the strategic report and the reports of the director and the auditor. And that's an ordinary resolution. The second resolution is to approve the director's remuneration policy, and that's put every 3 years. The third resolution is to approve the director's remuneration report. The fourth is the re-election of Margaret Payne. The fifth is the re-election of Patrick Reeve. The sixth is the election of Clive, who joined the board shortly after the AGM last year and hasn't been subject to election. For the eagle-eyed, you'll note that neither Marianne nor I appear this year for anybody to vote against, because we've both retired. So we move on to the seventh resolution, which is appointing BDO as the auditor to hold office until the next meeting. The eighth is to authorise us to fix their remuneration. The ninth, and it's an important one, is to allow us to allot shares. And the penultimate one, which we already discussed, which is the preemption rights, is to disapply the preemption rights so that we can effectively manage the top-up offers should they arise in the future. And the final, and it's a very important one, is again a special resolution, which is to authorise the company to make share buyback up to its 15% during the course of the year, which is for many of us the capital exit rather than the secondary market in its conventional form. The results of the voting that we've already received from the proxies will be announced after the AGM through a regulatory information service announcement. And then it will also be published on Albion's website as soon as reasonably practical. I'm quite looking forward to this next line. I confirm that the poll voting has now concluded and I declare the poll closed. That seems to be quite a grand way of bringing a meeting. And at that very moment, we put on the screen the proxy votes that we had received, obviously before we had the votes of any poll, which show, I think it's fair to say, that all of the resolutions are comfortably carried by the percentage voting and the discretionary votes in favour. So all that remains is to thank you. This concludes the formal business of the AGM. I'd like to thank everybody who is joined by webcast. I don't know how else you would join, but sadly, thank you all for coming in webcast. But we continue to welcome feedback that you might have, and that can now be emailed to Clive at aatgchair@albion.capital. And if you haven't managed to speed write that, and you probably haven't, it'll be on the website and it'll be indicated if you need to find contact through the company secretary. Now, as a sad moment for me, I actually, now the business is finished, I've officially retired. I'd like to thank all my colleagues for their support and friendship over the years, and to wish them and the company very well for the future, not least because I'll continue to be an investor. And so I will formally close the AGM, and on behalf of the board, in these challenging times for us all, I hope you all stay safe and well, and we see a good number of you at the shareholder seminar later in the year. Thank you very much. Goodbye.